Hello, everybody. Welcome. Please let me know if the audio quality on YouTube and on X are both good. Um, you can reply below the space in that blue pill at the bottom right corner on X and leave a comment on live chat to let me know that the audio quality is good so that we can get started. Tesla stock. Let's see where it is today. Today is a major options day. Um, there is, I think it's triple witching this time. So lots of options, a lot of options are expiring today. So there might be some volatility going into the next few hours here, but this is temporary and it's not really related to fundamentals of the company. Um, Overall markets, S&P 500 up 1.6%, Nasdaq up 1.7%, Dow Jones up 1.7%. So pretty much very similar. Russell 2000 up 1.6. This is a bounce across the markets. All sectors are in the positive. It's a bounce from the other day's massive sell-off. On Wednesday's massive sell-off after the Fed decision. Thursday was flat, and today we have a bounce back. Um, Markets are deciding what to do. So this morning, we have some new data that came in. Personal income came in at 0.3% growth for November, lower than the expected 0.4 and lower than the prior 0.7. That's a bit of a drop in November versus October. And the personal spending came in at 0.4% growth. And that was also lower than the 0.5% expected and 0.3% in the prior month. On top of that, PCE, personal consumption expenditures price index, came in a little lighter than expected. So that may be what's driving the market today. We don't quite know. Give me 1 second. All right. University of Michigan Consumer Sentiment final reading for December. This is one of the first few readings for December so far. Um, Came in basically in line with expected and what was also prior. GDP now shows 3.1% growth, real GDP, seasonally adjusted annualized rate of 3.1%. So that's in line with Q2, Q3. So a very strong year of growth for the US economy in 2024. I think when all is said and done, it's going to be about 2.5 to 3% for the year. But the question is really around what's going to happen next year. Let's look at the sector performance today. NVIDIA is continuing to surge higher today, up about more than 3%. For the week, however, NVIDIA is flat. So NVIDIA is seeing very large level of volatility in recent days. Any questions, comments, please request to speak. NVIDIA is one of the top 3 stocks in terms of weighting for the S&P 500. And um, um, along with Apple and Microsoft, Apple is also pushing higher. Let's see what the performance is like right now. Apple today is up 1.5%, Microsoft up 1.2%. This is indiscriminate buying to reverse what happened on Wednesday afternoon, indiscriminate selling. And it's comprised so far about half of the drop. So the buying pressure has made up about half of the selling pressure on Wednesday afternoon. If you, to the extent that you track Fibonacci indicators, this is an important level right now. Technical analysis may be a bit more important for short-term traders than long-term investors. The volume is also a bit lighter than the drop, and volume throughout the day has decreased today as the markets increased. So from a technical perspective, that's also an indication that the retraction may be a bit lighter in power. We have a new speaker. Let me just see real quick. I pinned at the top of our screens a quick first reading for V13. So far, there's about 763 miles logged in. So this is in no way a statistically significant amount of data. But this is the picture I'm going to be looking at to measure FSD 13 progress. We've seen many, many tweets showing that FSD 13 has had regressions, has been going through stop signs, stop lights, red lights, etc. So nowhere near the performance reported by the first handful of testers. And I'm not saying one or the other is correct, but this is why I look at Tesla FSD tracker and wait for enough data to come in. So that's the top of your screens. That's the screen I'm going to be looking at specifically. Drives, no critical disengagement. Percentage of drives with no critical disengagement. I predict that throughout the next year, 2025, that's going to get to about 96.5% reliability. King Bob, go ahead.
Yeah, I'm not sure if you addressed this already, but I'm wondering if you think that FSD training computer is constrained, considering how V13 was trained on the Cortex cluster, and that was just starting to be built around like 3 or 4 months ago, and they also had to test and validate like subsequent versions of V13.
Yeah, what evidence do we have that V13 was trained on Cortex?
It says in the release notes.
So they trained the entire model, the entire thing, or is it parts of it in Cortex?
I'm pretty sure it was the entire thing. I can check on my car real quick.
Okay. Um, and what's your question? Do I think Tesla's constrained by
Yeah,
AI
do you think
compute training
it's
compute?
yeah? Do you think it's constrained, compute constrained?
Yeah, I think yeah, that is my perspective at least. Again, this is not my expertise area. I may be wrong, but as we all know, for a larger model. I mean, by the way, like the context window still hasn't I think this V13, I would call this a V13 light release. Some of the biggest changes that we were expecting for V13 is not there. Like it's not, feature complete. The 3x context window still is not there. So I think they just want to get something out for Christmas, and that's what they're doing. It's really too early to
Yeah.
um, say anything about these things. I
And
can't
just
answer your question. Yeah.
yeah, and just for extra context, I just checked the release notes. It said 5x training compute scaling enabled by Cortex cluster. So I'm not sure if it's like the entire model, but yeah.
Yeah, exactly. And then the other thing is obviously this is a management statement. They can't say anything. And clearly they have in the last decade with no repercussions from a legal perspective. So I think there's a lot of leniency. Like I would take it with a grain of salt.
All right. Thank you.
I mean, if you remember, 12.5 or 12.6 was supposed to have like 10 times or like 4 times of miles per critical disengagement, and there's absolutely no evidence of that, except for some anecdotal evidence from a handful of testers.
Gotcha.
Um, I think the Cortex build out will probably take some time as well. And even when that's fully built out, and even when majority of your fleet is AI4, I think that even that is not going to be enough. By the way, the V13 data that's coming into Tesla FSD tracker so far is just AI4 cars. And V13 is not yet available on hardware 3. So if you're comparing to V12, you have to consider the fact that you're comparing AI4 cars to mostly hardware 3 cars. And in that context, like we should expect um, a material increase in performance in the coming months. And I put that like as once we get tens of thousands of miles logged into Tesla FSD tracker, tens of thousands of miles with enough diversification from different states, different scenarios, weather conditions, etc. And that's going to happen, I think, maybe by March. Um, I suspect that we're going to see 96% percentage drives with no critical disengagements. So some improvement from V12. And that throughout 2025, I think that's going to trend to 97%. So for the year, it's going to be about 96.5%. That's my guess estimate that we can track against as we go along. But so far, just a few hundred miles is just not enough. But the rollout is continuing. Um, at About Tesla is the one I kind of look at in terms of measuring or kind of be keeping informed about the rollout progress. Although I think he's become increasingly biased as an account. He used to be a lot less biased about these things, but I think what happens is when people get, and I'm not saying this is what's happening to him, but generally speaking, what I've seen is as people get more followers, they become more biased, and it's just the way it is. He says, as of December 17, so that's Wednesday, and we haven't seen a tweet after that. V13.2.1 has been released to about 10% of the Tesla fleet in the US and Canada. And that's primarily because of the limitation on AI4 cars. And he says 75% of all eligible AI4 vehicles. And I think Ashok has said it's going to take some time to get it to hardware 3 cars. And we'll see when that happens. And we're also going to be able to track on Tesla FSD Tracker or FSD Community Tracker how hardware 4 and hardware 3 cars compare in performance. I think that's going to be very interesting too, because to the extent that people are assuming hardware 3 cars will be roller taxiable, we're going to want to see similar performance, just very little degradation. And but I suspect the degradation will be larger than people expect. And that's, I guess, good for Tesla's automotive sales. That's an incentive for people to upgrade from a hardware 3 vehicle to a hardware 4 vehicle with a free FSD transfer. But I think in an environment where interest rates are so high, I think that will happen slower than Tesla bulls expect. Like by the end of next year, I suspect most of the fleet will still be hardware 3 cars, not hardware 4 cars globally. I'm gonna put out 2025 predictions thread on my account soon. And so that's gonna be in the next week. I'm gonna do a thread with a bunch of predictions for 2025 around FSD performance, Optimus progress, and automotive sales margins, stock price kind of thing. And then we'll see where we end up at the end of the year. This is just, it's mostly for me to kind of track my prediction progress more than anything else. So it's 1:20. We have 2 hours and 40 minutes till the end of the trading. Today is, I think, triple witching, if not quadruple, which means there might be some volatility as market makers and option writers try to hedge their exposure. This obviously is going to vary from stock to stock, but it's going to be a pretty high volume, high volatility kind of day. And the markets are coming down a little bit already in the last hour or so. I'm also trying to improve my kind of um, shorter term performance. I'm joining other spaces under a different account. Interacting with people around technical analysis, around um, you know trading predictions. I'm not executing any trades based on that, but at least I want to see how they think about short-term trading. And I've learned a lot, and I'll share some of those things in here as well in the future. But people, I think most of the market is still very long. There's a lot of leverage in the system. There's a lot of hype across the markets. Like if I look at MicroStrategy stock today is up 7%. There's very little doubt in my mind that MicroStrategy is a house of cards built on house of cards. And if to the extent that people are buying call options on leverage ETFs that hold MicroStrategy stock, that's 4 layers of house of cards. And there's no reason, as far as I can tell, that it should be trading more than its net asset value of its Bitcoin holdings. Bitcoin prices have come down a bit. This morning, they were as low as $92,000 for Bitcoin, which is incredible. $92,000. That is down from $108,000. So in just a matter of 48 hours or so, less than 2 days, the supposed store of value went down by 14-15%. There is no, like, money market funds don't go down 14-15%. Like if you look at the number, kind of type of things that accounting principles, generally accepted accounting principles classify as cash and cash equivalents. A primary consideration in classifying something as a cash equivalent is that it's stable value. So money market funds, for example, are short-term investments. Cash equivalents would be something like cash deposits, CDs, certificate deposits, and things along those lines. But I think there's certain types of money market funds that are just super short term, like overnight kind of holdings that can be classified as cash equivalents. I think don't hold it to it. But what happened back in Lehman Brothers collapse at the end of 2008, that diverged from 1-to-1 ratio to cash to something like I'm just making a number for illustration purposes, something like 0.99. And that was a huge, major source of concern for the stability of the financial system. Just that 1% differential posed a major concern from the officials, Fed officials, regulators, the government, and financial market participants, because they're supposed to be cash equivalent. And if they change very little, that can mean the stability of the financial system, the ability for price discovery is just completely detached. And compare that to this 14-15% move in a matter of hours, when there is no stress in the system, really, is just kind of goes to prove that this is no store of value. This Bitcoin is as store of a value as some meme stock or a penny stock. So Bitcoin maximalists went from claiming that this was supposed to replace currency, US dollar and everything, to now it's just a store of value, to now I think they're gonna have to shift the goalpost to something else. The other thing to keep in mind here is that Bitcoin really came about to kind of mainstream in 2016, and even more so in that surge towards the end of 2017. So it hasn't really seen a major downturn. We had the COVID recession, but that was very, short-lived, ephemeral, and I think it's important to note that Bitcoin maximalists have not gone through a major downturn like the Great Financial Crisis, which I think is ahead of us. And I suspect that this house of cards will collapse. Um, they've had a couple of, I guess, a slowdown in the economy since the Great Financial Recession. Not a recession, but kind of like a financial market, stock market declines, bear markets and stuff. Um, Back in 2019, from the top of 2017, Bitcoin went down by 80-90%. That is not a store of value. Um, During COVID, um, Bitcoin crashed like everything else. That's not a store of value. And during the 2022, when some of the bubbles popped, Bitcoin went down another 80-90%. So something that is so incredibly volatile just doesn't classify in my mind as a store of value. Anyway, so these are the kind of things I'm looking at. Sometimes Bitcoin maximalists show the fact that the 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 fact that BlackRock is you know some of these banks are seemingly adopting BlackRock is just BS. They're just trying to make money off of fees by selling Bitcoin ETFs to others, basically, or Bitcoin services. If there's demand, they just want to make money off of it. So that's completely normal. Some of these big banks. Um, Outside of MicroStrategy, I don't think there is any sort of institution that's putting a huge stake in the value of Bitcoin. I'm not aware of it, at least. If somebody's aware, then you can let me know in the live chat or in the reply at the bottom of the screens. All right, let me sound check. Please let me know if how the audio quality is. YouTube is great, I hear. And on X, I think if there was some sort of issue, people would be letting me know. Um, I think Tesla investors should be mindful of the massive hype built into the stock in the last few weeks. Okay, sounds good on X as well. Thank you very much to those of you who let me know. Um, Tesla stock volatility has increased, obviously. Part of that is due to the gamma squeeze of options, call option trading, which can be manipulated even in a company like Tesla. The Tesla is a very closely held company. Elon owns a large percentage of the stock. Handful of holders also own a large percentage. So, and then retail investors kind of move in one as a one group really. So, and then there's also some index funds that don't trade. So this stock can move 100%, 200% with very little money, and can be moved, manipulated. And I think that's what's going on. But if the fundamentals don't follow, then the stock will eventually get back to reality, the fundamentals. And the fact is, Tesla's PE ratio today um, is about 200x, adjusted for the non-cash gain in the Q4 of last year. That's a one-time gain that's not going to repeat and has no bearing on the valuation of the company. Adjusted for that, you're looking at 200 times price to earnings ratio. But what really matters for valuation of the company is free cash flows. And Tesla obviously has to buy these GPUs. So that's an essential part of the capital expenditures. And I would classify that as necessary capital expenditures. And the potential return of this capital expenditure is unknown. It's uncertain. I think people are jumping to conclusions about how Tesla robotaxis, when Tesla robotaxis will come, how successful they're going to be, what the price is going to be, what the profit margins are going to be, without really considering the fact that Waymo is rapidly expanding from city to city to city. Their reliability of the service is increasing. As they scale, they're lowering obviously their hardware costs, and I think Waymo is going to be a significant source of competition for Tesla. And then the second group of competition, I think, is going to be for Tesla Robotaxi. I think is going to be um, hybrids and EVs driven by human drivers that really just need minimum wage. And to gain any sort of material market share, I think Tesla will have to lower price per mile to about 50 cents or below 50 cents. And at that point, it's like, what's your profit margin anyway? And when is that going to happen? In my mind, that's like a decade away. And then on top of that, there's some new competition coming in for Optimus as well. I think competition for Optimus is going to be orders of magnitude more for Tesla's automotive division. If you kind of think about Tesla automotive throughout 2010s, um, Elon was focused. He was 15 years younger. He was hungry for he had a survival mode for Tesla. He had just come out of the Great Recession, um, and he had the full support of you know Democrats, and he was focused on one company and one product. Like SpaceX wasn't really a huge part of his time, as far as I can tell, in the early 2010s. Even though the company was formed around the same time as Tesla, I don't think SpaceX was consuming much of its time in early 2010s as Tesla went public and brought the Model S to market and scaled it in 2012 and 2013 and 2014. During those 3 years, my understanding that Elon and his close team of top engineers were working 100% focused on getting Tesla and very much mission driven um, to get the company going. And that's what it took to get Model S to profitability that no other company in the US at least has been able to achieve. Then Model X came around, doubled the total addressable market for Tesla, and Elon was still focused on Tesla very much. Only after Model X has ramped, I think SpaceX started to kind of consume more of his time. But there was no other company that he was focused on at the time. There was no Neuralink, there was no Boring company, and the dozen companies that he has a role in now in one way or another, and let alone politics. Today, I think he's more focused on politics than any of his companies. And Tesla has an array of products, and some of which is struggling. Like, for example, I don't think Model S and X are top of mind anymore for anybody in the company, even though they're great products. And if money is no problem, I think people should go with a Model 3, Model S or X instead of 3 and Y. But um, the Model 3 and Model Y, especially Model Y, is top of mind. And Model 3 is giving us some signals of um, issues right now. So the Model 3 redesign, um, or refresh, whatever you want to call it, um, ramped throughout 2024. So 2024 is the new Model 3's first year where it's popular. Like it's still like first year of the new redesign. In that first year, you would expect and I expected back in 2022, the Model 3 total addressable market, like sales to grow, like double, triple, because it is incredible product. They added $10,000 of value to the product and didn't change the price materially. But even at this year one end of year one, Tesla is having to discount it in many ways, offering, extremely cheap leases, offering 0% financing rates, and all sorts of tweets coming in. And the first sign I kind of got the sense where the demand for Model 3 may not be as strong as I thought is when Franz and I forget his other name, the other guy's name, um, did it kind of like went on camera and started talking about the Model 3, how great it is. I'm like, okay, well, if it's not like if it was selling like hotcakes, they wouldn't be kind of pushing it. Executives wouldn't be like on camera doing live streams for this Model 3. And so I honestly don't even know what the exact driver here is. Maybe it's just the interest rates. Maybe Model 3 demand will continue higher as interest rate come down and everything. But this is Model 3 is not a huge driver of profits for Tesla anywhere around the world. But the problem that I see right now is if the Model 3 redesign did not lead to a huge increase in Model 3 demand or sales or margins, then what does that mean for the Model Y redesign? And if the Model Y redesign also ends up being um, not as much of a boost to Model Y demand as we're seeing from the Model 3 redesign, then we might be heading into a year-over-year flat year again. So now you're looking at 2 years in a row of 0% growth and flat profits and very limited free cash flows. Like we're talking a couple of $1 billion of free cash flows per year, which is incredible. You know, um, a company like any other company, take out the name Tesla from it, a company that is generating 2 years of flat revenue and earnings and limited free cash flow should not be valued at more than a couple $100 billion. That's it. But of course, Tesla has a competitive advantage on many fronts, and participating in industries that I think are going to be very valuable in the future. Um, so, has a cult following. Like, there's a number of people who will not sell this stock no matter what. Um, has a charismatic leader with a proven track record. So, if we give a premium to that, uh, then I think that kind of all of that is in line with, and also assume that interest rates are going to come down somewhat in the coming years. Then I think that's how I get to $600 billion of free fair value for Tesla. $600 billion, 200 billion for automotive, 200 billion for energy, and 200 billion for other robotaxis, Optimus, etc. Where I differ from the rest of the bull community is mostly around robotaxis and Optimus. One, robotaxis will be, I think, a decade away, mass adoption, not just in one or two cities. And then Optimus, I think, is also at least 5-10 years away, volume production, mass adoption. And during that decade, Waymo is going to continue to grow. Chinese players are going to continue to grow, and there's a number of startups that are doing the same thing with humanoids. And I'll give you one of them. We already talked about figure AI in the space and AI amateurs, but there's another one that just came about. So at the top of our screens is an announcement by Apptronic. Apptronic is partnering with Google DeepMind. Says huge news. We've joined forces with Google DeepMind's robotics team. And Google DeepMind obviously is one of the best AI teams out there, if not the best. Apptronics says we'll combine best-in-class AI with cutting-edge robotics hardware to create advanced AI-powered humanoid robots. Get ready for a new era of helpful robots in dynamic environments. So on one hand, you have Figure AI, backed by Microsoft, Nvidia, and OpenAI. On the other hand, you have Google and Electronic, and both of these players have extremely an order of magnitude more cash than Tesla does. Okay, and they have software capabilities unlike legacy automakers. So just a second ago, we were discussing in the 2010s, Elon was very focused on Tesla. Elon was very focused on Model S, one product, one company, got it off the ground barely with the support of the Obama administration, all sorts of incentives, and then unmatched support from Democrats. Whereas on the Optimus humanoid front, you're facing companies with world-class software teams, even better AI teams than Tesla AI team, in my opinion, and recognition that they're going to focus on this segment. Like legacy automakers couldn't care less throughout 2010s about EVs, whereas today all of these companies are prioritizing these projects. They're pouring billions of dollars, tens of billions of dollars in acquiring GPUs and training foundation models, which Tesla cannot do. Tesla does not have tens of billions of dollars, and the automotive Tesla automotive is not going to generate tens of billions of dollars of profits anytime soon. So how are they going to compete? If money is such a big deal for training foundational models and training your AI, how will Tesla compete without that kind of capital with the likes of Microsoft, Google, which is vertically integrated into creating TPUs, and with Google, I think Google is probably the best combination of hardware on AI hardware, and AI software. How are you going to compete against that? Not to mention the Chinese players that are also doing humanoids now. BYD is building up its own humanoid team. And BYD, if you remember back in 2010, 2012, 2013, when Elon was asked about BYD, he laughed his ass off on camera in live TV about BYD. Fast forward 10 years, 15 years, you're looking at a company that's delivering more vehicles, like top five global automaker, and they just started expanding, exporting to other countries. So it's only going to grow. They're vertically integrated in battery production to the extent that Tesla tried, but so far hasn't been able to do. And China is 3 times the market of U.S. automotive. So Tesla isn't going to be able to penetrate China as much as BYD does, and Tesla's looking to penetrate China in energy storage, FSD, robotaxis, Optimus. How are we going to compete against BYD in China? And then tremendous competition for humanoid Optimus in the US as well. I'm not even talking about Europe because Europe obviously is protecting its own Volkswagen, BMW, Mercedes, etc. So you're not going to have robotaxis, Tesla robotaxis there probably for a long time, if ever. Um, so you have that kind of lay of the land, competitive landscape, and you're going to that competitive landscape with a 400x um, price to free cash flow, as opposed to 40x average of other Max 7 companies, so 10 times more richly valued, and a high interest rate environment where these valuation multiples matter more than in an environment where you have 0% interest rates. So, I think it's going to be very tough to. I mean, I think if Elon was focused on Tesla and Optimus the way that he had, where he was focused on Model S back, 10, 15 years ago, then I'm confident that Elon would win this race. But he's not there. So to the extent that people tell me, don't bet against Elon, I'm not betting against Elon. I voted Republican, you know, and in the election in 2016, I voted against Trump, and this time I voted Republican. And I did think Republicans were going to win. I didn't expect it to be such a landslide. I went to the rally in Pennsylvania. Um, And, you know, I think shorting Tesla stock today is not betting against Elon because Elon isn't even in there anymore. He's not even focused on Tesla anymore. So how is that betting against Elon? I don't understand. Um, all right, let's get some comments from YouTube. Marty Party 03 is lighting up YouTube comments. Ashok said he believed FSD would be safer than a human driver in Q2. Well, it's still a management commentary, whether it's coming from Elon or Ashok or anybody else. It's still coming from management commentary. I mean, if you go back to AI Day, um, let alone Ashok, but even his team was super bullish about expanding FSD internationally, and that was 2 years ago, and still hasn't happened. So, um, I think the kind of like optimism, the Uber optimism, and kind of just positive statements can permeate across the company. I think it comes from a good place. Maybe they just, but I think it's more wishful thinking than anything else. Um, Mars says autonomous human robot market will be the biggest market ever seen in history. Yes, I agree, but it also has the biggest competition. Plenty of room for several players is the exact same thing we heard from Rivian investors for a long time. And obviously, that's just not how that works. You know, um, you end up with limited margins, and also the more players you have, the more um, kind of unpredictable the outcome becomes. Like I think it was relatively easy to foresee that Tesla Automotive was going to succeed, and the way I kind of thought about it was, well, Tesla has the Gigafactory. They're focused on 100%. The entire company is focused on its mission, and legacy automakers aren't even paying attention. And and they got there, but I can't really hang my hat and I've been saying this for like a year now. I can't really hang my hat on anything specific why Tesla Optimus will prevail over the likes of Google, DeepMind, like the with Aptronic partnership, like the one at the top. Which, by the way, have you heard that tweet from any of the Tesla influencers? No, not a single person has tweeted that news that came out yesterday. You only hear it in Tesla Live. And that's a major, major development in the competitive landscape of humanoids. So I think that kind of goes to show the Uber bias in the entire community that people should be careful about. Um, Marty also says on YouTube live chat, how fast Apple and Microsoft are growing. So when I compare price to free cash flow multiples, I'll pin this tweet at the top of our screen that I think is very revealing. That no other influencer is talking about, that you won't hear this in any other space because it is damning. 400 times price to free cash flow ratio, 10 times greater than an average Mag 7 company. And in the replies, I always hear, well, Tesla is growing. Well, is it? It's 1.8 million vehicles this year versus last year. Next year, we have management forecast that it's going to be about 20%, and I bet you it's going to be less than that. Margins are going to be similarly limited next year as this year. In Q4, margins are going to be similarly low as Q3 and Q2. Tesla is having to discount its vehicles to a record extent to move metal to get to 1.8 million vehicles. Tesla Energy in the US is limited by regulatory hurdles. In China, it's going to be limited by competition. And Optimus and robotaxis are 5 to 10 years out, as opposed to Meta is already seeing material benefit to its bottom line from AI efforts. Apple is as dominant as ever, even if it's not as innovative as it was before. Amazon is now vertically integrated into its Trainium, attracted a company like Anthropic to partner to train on its Trainium ASIC. Google is the leader in hardware, both hardware and software AI. NVIDIA has 99% share, dominant in its what it does. And they all have 20, 30% growth rates, except maybe for Apple. Okay. But Apple obviously has, uh, so it's not that, it's not that Tesla has better growth. Tesla has worse growth and 10 times greater price to free cash flow multiple. And in the replies, I hear things like, um, they said the same thing. Tesla Q said the same thing in 2016, in 2019. Well, that's not true. There was no free cash flow in 2016. Tesla was still raising cash. So people don't even understand what free cash flow multiple means. They're thinking of GAAP earnings. They don't understand the difference between free cash flow and GAAP earnings or non-GAAP earnings. It's incredible to me, the level of delusion in the community, the level that it's reached over the last 12 months, 2 years, 3 years, is insane. So I think that we're heading into a recession. I think even today's data that is giving a boost to the stock markets overall is confirms, or not confirms, but um, is in line with my recession theory. Let's look at the data, right? So the markets are going up because inflation is low, and so to the extent that you are worried about the hyperinflation, inflation reaccelerating, that's a relief, right? But look at the other data that came out. Personal income lower than expected. Personal spending lower than expected. University of Michigan consumer sentiment for December slightly lower than expected. Inflation data lower than expected. That's all in line with a recession theory. Micron announcing earnings, seeing weakness across industries on its consumer segments. That's in line with a recession theory. So oil prices are low. That's also in line with a recession theory. We're seeing yields in China plunge. That's also in line with a global recession. Europe the same. U.S. dollar increasing. That also in line with a global, slowdown. So, um, but there are many signs right now that we're not in a recession yet. The theory is not that we're in a recession. If this Wednesday stock plunge resumes next week, I think that would be the kind of beginning of it. But I think as of today, we're probably not in a recession, but we're probably headed into a recession. So I try to kind of measure, keep my confirmation bias measured. So here's a list of indications that we're not in a recession today, as follows. Number one indication that we're not in a recession today is initial weekly claims for unemployment benefits are still low. The last reading that came out on Wednesday was a drop from previous week. And as long as they stay here or even slightly rise, so as long as they kind of ping pong between 200,000 and 300,000, we're unlikely to be in a recession. And this is a metric that is measured. It's not a survey data, and it's not really revised much in future periods. So it's a pretty reliable indicator, I think, of but it's a concurrent indicator. So you can't really say we're not heading to a recession looking at low initial weekly claims. Um, I'm also not seeing any sort of news of layoffs. Um, there's also anecdotal evidence. Like I heard, I think one or two people who got laid off, but that's not in any way, shape, or form a major indicator of a recession or a slowdown in employment market. So far, that I think says we're not in a recession as of December, mid-December, let's say. People are still traveling. Baby boomers are rich. They have lots of equity in their homes. They have 401k balances. They have trillions of dollars in money market funds. They're spending it. They're going to travel a lot. And so, as long as that continues, I think we're not in a recession. I'm also not seeing, I kind of track some indicate like, I try to like, come up with a list of like predictive indications, leading indications of every one of these things, and I'm not seeing much of a decrease there. So I think travel will probably, especially by baby boomers, will probably continue strong for now. Daily payroll taxes are rising year over year. There's not much of a recession there, and that's also a concurrent indicator. Residential building construction employment is still rising, but I think that's about to change. Lennar, let me actually just pull this up real quick. Housing sector is important for various reasons, and I pinned at the top of our screens a tweet by Lance Lambert. Lance Lambert shows a major tick up in mortgage rates. Average 30-year mortgage rates went from 6.5%, which is already very high, to now above 7% after the last couple of days. It's probably going to come down next week a little bit after today's drop in 10-year yield. But Lance says that at the top of our screens again, Redfin CEO Glenn Kelman, a very animated person who goes on TV show and TV show, obviously has a huge, obviously has his finger on the pulse of the real estate market. Redfin is a major company. Um, Says plan B if mortgage rates don't come down is to drink our own urine or our competitors' blood, stay in the foxhole, said in the earnings call. And Lance has a picture of a screenshot of the exchange. Um, Let me find the comment from Lennar as well, if I can. Here we go. From the same person at the top of our screens. Lance's giant home builder, Lennar, tells shareholders to expect a decade plus low in first quarter gross margins next quarter. We're going to adjust to market. We're going to maintain sales volume, Lennar CEO said. Okay. The margins are depressed. Competition is rising across the home building industry. I also have a short in Toll Brothers, who released earnings a couple of weeks ago. They also were light on guidance as well, and the stock dropped 25%, 30% from the top. I caught in my short about 25% of that, and closed about half of my position. But I think, generally speaking, housing sector, housing stocks have just run up way too much, and I don't think the fundamentals of the industry support that kind of valuation. And it's also a very leveraged industry in so many fronts, on so many fronts, whether it's the stocks or the industry itself, company balance sheets and everything. So it's susceptible to a major pullback. Um, so I might go back into that short at some point. I'm not sure yet. Let's see. I think the other thing that people should probably be aware of, this narrative that's building up against Elon from the Democrats. Um, Democrats, obviously these are political institutions that they're highly organized. Democrats are incredibly organized, from the top to the bottom to the ground, and they just feel this intense hate against Elon and Tesla. Just really intense. I mean, when I was talking to people who, I would go up to people and say, "Why did you get, Prius over at Tesla Model 3?" I kind of try to hear what they had to say. And I remember very vividly the couple of people that have chosen new vehicles to purchase new vehicles other than Tesla, after the major price cuts throughout last year, um, said to me like they would be shaken when they start talking about Elon. They were visibly angry and just literally hate the person. And these people will never buy a Tesla. It doesn't matter if Elon tomorrow comes out and says, you know what, I'm a Democrat now. These people will just never buy a Tesla. They'll buy literally anything else. And I think the number of people that are in that situation is greatly underestimated. Not to mention that I thought, and by the way, I support everyone's free speech. I think what Elon is doing is very important and necessary. I'm glad he's taking this role, and I pinned at the top of our screens a post by Hillary Clinton, or sorry, a post by Unusual Whales quoting Hillary Clinton. She says, "The Republican Party, taking orders from the world's richest man, is on course to shut down the government over the holidays, stopping paychecks for our troops and nutrition benefits for low income families just in time for Christmas." And various versions of this statement is released by House Speaker, who is a Democrat, and a number of other people who are going on channel after channel spreading this notion, putting Elon on the defensive, having to say, I'm not even the author in this bill. But obviously, no one cares about the facts in a situation like this. This rhetoric at the top of our screens is now getting spread across the country. CNN, NBC, any other, and any of Elon's competitors in any other industry, whether it's SpaceX, Tesla, dealerships, oil companies, they're going to be spreading this rhetoric throughout the coming periods. And as long as Elon's involved in politics, this will not change. And my understanding, to my surprise, he is continuing to be heavily involved in politics even after the election to even a greater extent. So that's not going to change. This will only get more intense. Okay. And in this situation, when emotions are running so high, when people are feeling this just intense hate against Trump and Elon, anything Republican, whether it's abortion rights or um, you know um, you know kind of like diversity, like DEI type of stuff, anything will get um, intensely kind of reshaped, reframed to push the agenda that Elon is a bad dude. Okay. And we're talking tens of millions of people in the US alone who will never vote Republican ever in their life. I think there's about 40% of the population, which is about 350 million. So you're looking at, maybe 100 million, but let's say tens of millions of people conservatively who will never buy or use anything Tesla ever. And as long as there's another option, right? And there are other options today with hybrids and EVs in the US. They're not as good, they're not as efficient, they're not as luxurious, but none of that matters. What matters is that these people feel emotional hatred against Elon. And what I think people miss is, and Short has been on top of this from the get go. I missed it too, but um, there are, I think, about 800 million people in Europe. And the more I look into it, um, Europeans are as liberal, as left leaning as California. So California is the most left leaning state in the country, US. And there will never be a Republican governor elected in California, as far as I can tell from today. In the near future, you will never see a Republican governor in California. California is kind of like the best um, state for unions. Um, California politicians go on X to curse at Elon. They make Elon's life difficult in California, and Europe is just like that. On top of the fact that Germany has to protect its domestic automakers, so this intensifying clash with the Democrats, Elon's intensifying clash with the Democrats, is going to result in material demand limitations for Tesla's products and services for many, many years to come. And I estimate the total number to be in the hundreds of millions of people. So 2 to 300 million people are completely detached from Tesla's products going forward. Um, like I said, I support Elon's free speech, and I think what he's doing is necessary, and I'm glad he's doing it. But it's going to take time for people to realize that this was necessary. And I don't know how much time, but it's going to take years. And only then, I think that group of people will start buying Tesla products again. Um, the yield curve is down about a few basis points today. It's still 4.5% 10-year treasury yield. Mortgage rates are about 7%. And I suspect the auto loan rates are probably going to stay around 9-10% for the foreseeable future. And even higher, we're talking teens for lower income, worse credit history type of buyers. And to the extent that Tesla is looking to expand its TAM with more affordable models targeting such individuals, then you have to kind of consider the average interest rate for a Tesla loan is going to increase in the coming months, in the coming years. So these are major headwinds that I just don't think there's anything the Tesla team can do on a macro basis to counter these things with the tailwind, unless they get to robotaxis tomorrow, which I don't think is going to happen. Any other questions, comments? Please request to speak. Let's go to Libby Palmer says Elon should stay out of women's rights. My job is not to tell Elon what he should do or he should not do. My job is to kind of just see what he's doing and how that works into Tesla's fundamentals. And he's way smarter than I am, and he obviously knows the intricacies of Tesla and politics or geopolitics more than I do. So I'm in no position to tell him what he should do, he should not do. And also, he has a right to free speech. He can do whatever he wants, he with his money or with his words. So, but there are consequences to everyone's actions. So that's what I try to kind of be mindful in an unbiased manner. Marty says, I don't like Bezos, but I still use Amazon because it's the best deal. Well, there's a difference here, right? Amazon, um, there is no analog to using Amazon. All right. Like you can't go to Walmart.com and get online delivery and stuff, but there's really nothing as comprehensive as Amazon.com. And Amazon is leading in terms of service quality um, than any other option on so many fronts. Um, and on top of that, I think more importantly, um, using like let's say for example, you're a liberal, you're a Democrat, you live in a neighborhood that is Democrat. You live in California, you live in San Francisco, okay, and all your neighbors are Democrats. If you use Amazon, nobody really knows you use Amazon. But if you drive a Tesla, everyone knows on the road that you're driving a Tesla. So that's number two difference. And then the number three difference is buying a Tesla is a big ticket purchase, as opposed to buying gum is very small purchase. So people kind of do it mindlessly. People don't really go around shopping Amazon.com versus other options when they're ordering something. So, um, but buying a Tesla or buying a car is a big ticket item, and people shop for weeks, if not months, considering other options. So it's more of a mindful, more of a bigger decision that I think just is not comparable. You're not comparing apples to apples with that kind of comments. And I see that comments on various versions of it from a lot of people in the replies. I read all the replies, by the way. Um, almost all. Catch Penny UK says, I think Yaman's missing the bigger picture. Elon said, don't invest in Tesla because of Auto. Auto is just a means to an end. I agree. But at the same time, I don't think even Elon expected automotive business to slow down as much as it did. I mean, just until 2 years ago, he was still talking about 50% year-over-year growth. And 2 years later, we have zero growth on the automotive with half the margins of 2022. So despite having the margins and massive record historic price cuts across all products and across the world, you have 0% growth. And the fact is, they can't cut prices anymore. They pulled all the demand levers. They lower prices. They're introducing they're doing 0% financing, which Elon basically cursed that he would never do several years ago on an earnings call. I was always surprised by that decision. But they must have had no other option left to do 0% financing. And they're doing it across the world, across all products now. Um, Cybertruck that just came to market is, ran out of reservation demand list in the US, and they're looking to ship it to, I think South Korea is the next one. So it's in Canada already, and it got approved in China, and I think they're looking to ship it in, I think South Korea as well. So that's 1 year into building the product, and they've only built tens of thousands of them. That's kind of wild. And they can't lower the starter prices that much because 4680 hasn't lived up to the dream that they shared on Battery Day with much lower costs, much higher power and range and all that stuff. None of that worked out, and I think that's probably why part of the reason why Drew Baglino was probably pushed out. My guess. Any questions, comments? Please request to speak. I think that this is a dead cat bounce. I increased my short position in Tesla despite the recent pullback in the stock price. I think Tesla stock is overvalued by about 55, 60%. And I also think that there will be a recession, as I've been saying throughout the last year. And if there's a recession, if there's a financial crunch, then all bets are off. I mean, the stocks can go dip way lower than fair value. So in that scenario, I would expect a less than $100 per share price for Tesla, given the lack of free cash flows. All right, so far we talked about Bitcoin store of value. We discussed Tesla FSD community tracker. We discussed the news that Eptronic is partnering with Google DeepMind to compete in the humanoid space, what that means for Optimus. We discussed Tesla's price to free cash flow multiple being 400 times versus the median or mean of the rest of the Max 7 being 40 times, so 10x higher, with lower growth projections. We talked about the housing market a bit. Talk about Redfin CEO's comments and Lennar's home builder comments. We also talked about the growing impact of growing rhetoric that Elon, the richest person on earth, is holding up the government, and nutrition benefits for low-income families and stopping paychecks for our troops just in time for Christmas. So I think the government is set to run out of or shut down in a few hours. We'll see if they reach a last minute deal. I think that's possible. I don't think Elon or Vivek are going to want to start with this huge mess. So I suspect that Doge will backtrack a little bit. That's my guess. But I put out a poll, and I'll pin this at the top of our screens as well. Who is going to blink first, Elon and Vivek or the Congress? And 80% of the votes said the Congress, 20% said Elon and Vivek. So we'll see how that works out. Welcome. You're welcome. The poll is still going on. It's going to go on for another couple of days, and you're welcome to vote at the top of your screens. Let's continue with the automotive industry. Car dealership guy put out a decent tweet today, an update on the inventory levels for the automotive industry in the US. You can see on this graph, actually, I'm going to put this on YouTube as well. By the way, for future reference, if you ever see any audio issues on X, YouTube sound has been perfect for as far as I can remember. So never a audio issue on YouTube. The audio issues appear to be just because of bugs on X. And here it is on YouTube on the screens as well. This is a tweet by car dealership guy. New car inventory has reached its high, and I'm gonna let's see. Okay, perfect. New car inventory has reached its highest point in 2024. Supply levels are now only 11% lower than they were in 2019. By the way, this is very similar to the mortgage market, to housing market. The supplies in days of inventory is about just slightly below 2019. And the employment market is slightly weaker than 2019. So everything seems to be aligning around 20 to 2019 kind of situation. Demand for Toyota and Lexus is still hotter than ever. Toyota is world class in inventory management. Tesla is even better. But Toyota obviously participates in more countries, more product lines, has dealerships and everything. So it's a bit more harder for them to kind of achieve these numbers. And they are twice as good as the second best, which is Honda at 62 days. And the US industry is average is about 85 days. So it's about 3 months as opposed to 2 months norm. So very high. And if you look at Stellantis brands on the right side, they're way past 6 months, and some of the models are more than a year, years of inventory. Ford has gone up to 125 days. So Ford and GM used to be about the same, but GM has stuck with the industry average, whereas Ford inventories have now extended to 4 months. Audi is also really bad. Nissan is going down and looking to merge with Honda. And I think this is this kind of weakness, price and weakness across the industry will continue. Today, FSD is not good enough yet to drive buying decisions. We will first start seeing a massive uptake in Uber drivers. And I've never been in an Uber that has high or that uses FSD. Never. I've been in dozens, if not hundreds, of Tesla Ubers. I've never seen one that uses FSD. So if a person who drives 300 miles a day chooses not to subscribe to FSD at $99 a month, you can't possibly expect a Tesla owner to subscribe to FSD, an average Tesla owner. And if that doesn't happen, then you're looking at a very highly unlikely situation that FSD would be popular with new buyers of Tesla. Obviously, if Tesla owners don't use FSD, even if Tesla gives it away for free for several months with free trials, then you can't expect them to pay for FSD either. Um, so FSD is clearly not good enough still, and I don't think it's going to be good enough anytime soon. to drive purchase decisions. And if that doesn't happen, then Tesla will continue to suffer from the excess production capacity across the world in the automotive industry. This is true for China, true for Europe, and true for US. So I don't expect a material increase. And I think Q1 will probably be pretty difficult because it's a seasonally low time as well. All right. On the other hand, customers, consumers are being kind of struggling with credit card payments. Credit card interest rates are very high. Credit card debt is building up, and credit card interest rates are going to stay high for a while because the credit card rates are even more depend even more on the Fed funds rate than all the loan rates and mortgage rates. So credit card delinquencies are, I expect them to rise. Like I said earlier, I will create a thread with all these predictions for 2025, and I'll publish it sometime this week, maybe this weekend. Any questions, comments? Please request to speak. At the top of our screens is Waymo saved data for its robotaxi service. That was, this is recent data. Waymo showed um, comparison of Swiss Re. So Waymo partnered with Swiss Re, an insurance company, to kind of verify this data. And you can see overall driving population has 3 claims per million miles. Latest generation human-driven vehicles. So sometimes one of the criticisms for Tesla safety statistics is that Tesla's fleet is newer, and if you compare it to newer vehicles, the difference is not as high as the Tesla safety report shows, which is a fair criticism. So Waymo includes here latest generation human-driven vehicles, the yellow one, at 2.5 claims frequency per million miles, and then they show the Waymo driver less than 1 for property damage. For bodily injury, I would be curious why the difference here. But the bodily injury, if you look at the bodily injury side, the right side, and I'll show this on YouTube as well. Give me 1 second. Right here on your screens. Left side is property damage. The right side is bodily injury. Blue is overall driving population. Yellow is latest generation human driver vehicles, and green is the Waymo driver. The Waymo driver outperforms, is safer, both on property damage and bodily injury statistics versus the other two categories. I think the metric that Tesla will have to beat is not only national average of about 500,000 miles between accidents in the US and 1 million miles between accidents in Europe, but more importantly, I think it's going to be the accident rate of human-driven Teslas with ADAS, but without autopilot. So Tesla already mentions that in its reports, and because the only difference then is it's the same fleet, it's the same ADAS systems. The only difference is autopilot, right? So it's the purest way of measuring autopilot and incremental safety provided by autopilot. So let's pull that up real quick. If I look at Tesla's safety report as of Q3 2024, Tesla vehicles not using autopilot technology have achieved 1.3 million miles between accidents. 1.3 million miles driven before an accident occurs. It's the metric that FSD will have to, unsupervised FSD, will have to beat before Tesla can roll out robotaxis in any meaningful way, in my opinion. not the US human driven average of all vehicles of about 500,000, and not the, in Europe it's a million miles. Um, so that's the purest way of looking at autopilot safety, I think. While we were in this space, Tesla FSD tracker updated, and there has been one more entry. So now we're looking at even the one I pinned at the top of our screens is dated now because Tesla FSD tracker updates every few hours with new data. And so you can go to TeslaFSDtracker.com. Highly recommend it. All the criticisms I've read are complete BS. They're biased tweets by useful idiots um, spread to manipulate the public, I think. Tesla FSD Tracker is the best tool we have outside of management statements, and management statements are obviously biased. Wave,
Hey, Yaman. Happy Friday.
happy Friday and happy holidays, man. Merry Christmas.
Same to you. Same to you. Got a lot to be thankful for. Hey, question for you on the Optimus. Do you have a range as far as valuation as it relates to Optimus? Best case, worst case, and any timing that you've already done in your analysis? I was thinking, given everything at the macro level, and what's going on with politics and everything else. There's a chance that resources get allocated significantly towards it. So my upside is a little bit higher. I haven't done the actual work yet. I just wondered where you were, on this.
So, sorry, can you repeat your question, but maybe like in a more succinct way?
Yes. What's your range of valuation for Optimus was Tesla, and you pick whichever date you want, and just a range.
So, just rule of thumb, I give $200 billion of valuation to automotive, 200 billion to energy, and 200 billion other. Other includes robotaxis and Optimus and anything else you can imagine. And with Optimus, I think it's incredibly way too early to assign any sort of material value, especially in the face of what is going to be an intense competition for the project. I discussed earlier in the space that Google has, and the Google DeepMind, which is the best AI team out there, um, is partnering with a robotics company to bring a humanoid project to market. We've heard of BYD building its own humanoid, and a bunch of other Chinese robotics firms are also doing the same. And we also have Figure AI, backed by Microsoft, OpenAI, and NVIDIA, and Jeff Bezos. So it's going to be an incredibly intense competitive environment, way more than Tesla has faced in any other area, and not even comparable to automotive. Because in automotive, legacy automakers throughout the 2010s, they weren't even paying attention to EVs. They hadn't even started when Tesla brought Model S to profitability, Model X to profitability, and then the Model 3 to break even, and then ramped Model Y. At those points, when 60 vehicles were ramping, there was no competition from legacy automakers. They were kind of like, half holding the bag with their fingertips. They weren't focused on it. And legacy automakers, they don't have an expertise in software, which proved to be very advantageous for Tesla. But if you look at Microsoft, NVIDIA, OpenAI, Google DeepMind, some of these Chinese companies they are way more vertically integrated than even Tesla. Like Google is vertically integrated into even research. Like Tesla doesn't do any research on AI. They're more engineers than scientists. Google also designs its own TPUs, tensor processing units. Google is the one that came out with attention is all you need paper that became the kind of groundbreaking, that led to groundbreaking transformers that Tesla uses today to build its own FSD. So Google is obviously very much focused on. They just invested $5 billion into Waymo. They're going to grow that as well, and all the data they get from Waymo, cameras and sensors, all the training expertise, experience that went into building Waymo is going to go into building humanoids. There is no analog to automotive, and even then, even when Elon was focused 100% on Tesla when ramping sexy vehicles. Still, you have a player like BYD that is now a top 5 automaker in the world that is eating Tesla's lunch in China. And the only reason why they're not in US is because the government is protecting US automakers. So Tesla Automotive is making money in US. They're not making China and they're not making Europe. So I just think that I honestly think that the probability of Tesla canceling the Optimus project is not 0. And I think it's 5 to 10% that it never sees the light of day, let alone ramps profitably. So it's way too early to assign any value, I think, to Optimus project. And despite the massive TAM, the competitive landscape is just too intense. And there's so many players. There's going to be 10 times, 100 times more players than there was in any other field that Tesla participates. And so with that kind of players, it's like you need basically at this point in the game, you almost need AGI to figure out who's going to be the winner. So, and on top of that, Elon isn't even focused on Tesla, let alone focused on Optimus. He's out there trying to save the world from politicians. Taxpenny UK is telling me that BYD is in UK and Tesla is beating BYD by 10 times. But you got to look at globally, right? You got to look at globally to these things. You can't just look at one market. It's a global market. And BYD just started expanding outside of China, along with other Chinese automakers. So in the next few years, let's see how that plays out.
I agree with
Truta T says Uber discourages use of FSD insurance reasons. It has zero to do with FSD ability. Well, it can't discourage, but a Tesla owner that's driving for Uber can use FSD if they want to. And they don't. And I asked them, why don't you use it? They don't even know where it is. They don't even know, they don't even turn on autopilot, but they didn't on the highways. So, wait.
when you say it's too early, when do you think it's not early? What's your definition of being too early? I do
When
agree.
you have mass production, mass volume deliveries, only then you can start kind of getting a gauge for the value of the business. Until then, it's super speculative. Like even the next 2 years, when Tesla's going to ramp production to a few thousand Optimus and have it in its factories optimistically, that's still too early. Like Figure AI supposedly started delivering commercially, and the other players aren't yet in the market. We don't even know their abilities, but we know Google team, for example, is extremely good with hardware and software around AI. So let's see deliveries start to go. I mean, Tesla doesn't even have the freaking production candidate for Optimus. They're still building the prototype. The prototype is still changing. Like just look at the fact that the market isn't really giving much value, and the institutional investors aren't really giving much value to FSD. And FSD has been on the market for years, with no analog, really. There is no ADAS service that even comes close to FSD. And yet the market hasn't really priced FSD in Tesla's valuation. Institutional investors, I think retail investors are kind of speculating call options and everything that's driving the stock wildly up and down. But if that's the case for FSD, how can you expect Optimus to be valued into the company anytime soon? Cruto T says, I remember when there were lots of cell phone brands also. But if you remember, when Google first came out with Android, nobody really expected Android to grow so fast. And it did. And I think there are more Android devices than iPhone devices today. And yes, Apple went to a $3 trillion valuation, but that's today with billions of iPhones being used around the world. And Tesla is already at 1.5 trillion. So, and like I said on one of the tweets at the top, Apple's price to free cash flow multiple is 35 times. Tesla's is 10 times more, 400 times. Wave, you're on mute.
Yeah, I was on the Google side. I really have my thought process with Google is they could go the Android route on their Waymo and be working in parallel with maybe a Toyota or some other auto manufacturer and become the OS and not really get into the hardware at all on the auto side. But on the Optimus or the robot side, have they announced the program? Have they partnered with anyone on that?
Did who partner with anyone? Google?
Yeah, Google.
Yeah, they say at the top, they partner with a company called Aptronic. And obviously Google is partner for Waymo with hardware manufacturers. And they're gonna probably do the same. If not, by the way, like I wouldn't be surprised if Google chooses to build the humanoids. Because building the humanoid is not going to be nearly as complicated as building a car. And I think everyone recognizes, especially Google, obviously, vertical integration is very important for success. And my understanding is that Google is looking to build its own TPUs as well, like manufacture its own TPUs. So I don't think they're like necessarily fundamentally against hardware. And Elon has proven on many fronts that hardware software integration, and Apple has as well, is very important. So vertical integration can be a reason why companies win over others, and it leads to faster iteration cycles, better feedback loops. So given that you probably need just a few $1 billion as opposed to tens of billions of dollars in the automotive industry to build to kind of get to mass scale, I suspect that Google will probably build, or any serious investor, any serious player will probably build their own humanoids. That's my guess.
Yeah, with size of Google, I agree. Definitely not on the chip side, just because they didn't invest capital investment, but on the robotics. Is there an announcement that you posted already on the Nest so I can look
Yeah,
through
it's
it?
in the nest. It's all the way the second. I'll show this on YouTube channel as well.
Great, thanks. I'll get into it.
This is on YouTube now. Huge news. We've joined forces with Google DeepMind's robotics team. We'll combine best-in-class AI with cutting-edge robotics hardware to create advanced AI-powered humanoid robots. Get ready for a new era of helpful robots in dynamic environments. This is an announcement by Aptronic that was made yesterday. And have you heard this from any Tesla influencer? None. Nobody has shared this news. Not a single soul on earth has shared this news. You're only hearing this in Tesla Live. Why? Because this is an unbiased, it's, hopefully unbiased space. I share both positive and negative news about Tesla. This has been the case for um, throughout 2024. And there's a link here that you can read Apptronic's announcement. So let's do that. Apptronic partners with Google DeepMind to accelerate advancement of AI-powered human robots. This strategic partnership will drive new frontiers in embodied AI. I mean, like, this is not the first example. You're not seeing Tesla influencers share news that are material but doesn't fit the rhetoric. Okay. So, for example, one piece of news that came out recently that they didn't share, and I think to this day they still haven't shared, is that Mercedes increased the speed of its level 3 autonomous system on Autobahn to 95 kilometers per hour. Okay. Now, it went from, I think, 50 to 95, so it's almost a double. And it doesn't mean that it's going to lead to a major, increase in take rate or drive sales away from Tesla to Mercedes and everything. But it shows that this is the pathway that the Mercedes is following. And this is an attack vector that Tesla bulls use to diminish Mercedes' efforts around autonomy. Okay. I'm not saying Mercedes is going to reach robotaxi level status, etc., in the near future, but the better Mercedes autonomous service gets, or other automakers' autonomous service gets, and kind of keeps up with Tesla FSD, the lower the probability of FSD ever becoming a reason why people choose Tesla over others. Okay. So, and it's very important to recognize the fact that they're not sharing these news, even though they spent years attacking Mercedes ADAS system for that reason, the speed limitation. And when the facts changed, let alone change their mind, they don't even share the news. So the same goes here. They don't share the news of Google DeepMind partner, the best AI team in the world, partnering with Apptronic. So that, in my mind, shapes what I think of the things that they do share. There's a massive bias across the community. There's a delusion across the community. Austin, Texas, and Mountain View, California. Today, Apptronic, the AI-powered humanoid robotics company, announced it had entered a strategic partnership agreement with Google DeepMind robotics team. The partnership will bring together best-in-class AI with cutting-edge hardware and embodied intelligence, advancing humanoid robots that can be more helpful to people in dynamic environments. Quote, "We're building a future where humanoid robots address urgent global challenges," said Jeff Cardenas, CEO and co-founder of Apptronic. By combining Apptronic's cutting-edge robotics platform with Google DeepMind robotics team's unparalleled expertise, we're creating an intelligent, versatile, and safe robots that will transform industries and improve lives. United by a shared commitment to excellence, our two companies are poised to redefine the future of humanoid robotics. Basically, all fluff except this part where it says transform industries and improve lives. So they're going for both commercial and households. Apptronic has one of the most established legacies in humanoid robotics, positioning it as the leading platform built for the AI age. Founded in 2016 out of human-centered robotics lab at the University of Texas at Austin, Apptronic brings nearly a decade of expertise in human-centered design and hardware engineered for safety and reliability. After building and testing 15 different types of robots, including NASA's Valkyrie robot, Apptronic developed the current iteration of Apollo, standing 5 feet 8 inches and weighing 160 pounds. Apollo is designed to perform physically demanding tasks and operate safely in industrial spaces alongside humans. Its thoughtfully crafted, approachable design balances complexity and functionality, erasing praise for customers and partners alike. So there's not much there, except 5 feet 8 inches, weighing 160 pounds, which is heavier than Optimus. Google DeepMind's robotics team has been at the forefront of AI and robotics. It brings together world-class expertise from machine learning, engineering, physics simulation around the hardest challenges facing development AI-powered robots, from pioneering advancements in foundation models to leveraging state-of-the-art AI models like Gemini, which, by the way, now beats OpenAI's ChatGPT. Google DeepMind's robotics team is developing advanced AI systems that can support robotics applications, enabling reasoning and action in the real world. This partnership builds on Eptron's rapid momentum. In just under a year since unveiling Apollo, the company has partnered with industry leaders like GXO and Mercedes-Benz, with more exciting collaborations set to be announced next year. And there's a video that you can watch. 150 employees so far. So this is very similar to Figure AI's partnership with Microsoft, OpenAI, NVIDIA, and Jeff Bezos. So there are now 3 major players in the US alone. There's going to be hundreds of players out of China. There's going to be dozens of players in the US probably, and as many in Europe. So we're looking at hundreds of players, with a handful of major players with proven expertise in robotics, in AI, and I would argue in some ways better than Tesla AI team. And Google, on top of that, has access to Waymo data. So to the extent that you believe Tesla's fleet vehicle data is going to be useful, that Waymo has the same data. So it's going to be tough. It's going to be a tough one for Tesla, I think. And like I said, I think the probability of Optimus project being canceled is non-zero. I would expect it to be about 5 to 10%. And I would adjust that estimate if Elon just switched back to focus on Tesla. But if that doesn't happen, then this is the reality. Any other questions, comments? Any other questions, comments? Wave, anything on your front?
No, I'm really glad I jumped on your call. Google happens to be my second or third, depending on how it's doing today, in terms of percentage holding. So I've always thought of them, but I didn't think they will get into this, and this partnership is real smart. And I think on Figure, I saw them, they actually their first revenue shipping products, which is good. So that's 2 US companies. Now third with Google, and that really changes things, even though the TAM is exponentially larger than car TAM. So at least we have, the more competition, the better. So that's the way I look at it.
All right, great. Did you and so you're a Google investor, top 2, top 3 investment, and you didn't know about this partnership until I told you.
No, I didn't know about it. That's why I really appreciate you posting it. And I really don't see it as a responsibility of anyone to do that. It's the responsibility of the person that, uh, you know, I hold the certain equities because of their track record, management team, roadmap. I have some dividend stocks for income as well. So I don't necessarily do deep dives on, like Google is one of those that I don't have to worry about the volatility that much. The P is real low. It's a cash generation machine.
What do you think about this in the next like 5-10 minutes? What do you think about this kind of emergent rhetoric that the world's richest man is preventing a government bipartisan deal?
It's just emotion. I think, like you mentioned before, people will use it in a very their own personal way to get whatever agenda that they're trying to get through. I just want the CEOs focus on my equities. The politics part, it's all a question of timing. If I had 100 years or 50 years or 20 years, I wouldn't care as much. It's all about timing, the type of problems that he's trying to address, Elon's trying to address are long term. And it's not anything in the next 5, 10 years that we will see it even. Because it's a huge culture change that he's
Yeah.
trying to do.
Yeah, thank you, Wade. All right. We have Fo in the space as a speaker. Fo also holds his own spaces on trading, short-term trading focused spaces in the mornings that I join under my macro analyst account. And very valuable spaces. So welcome, Fo. Did you end your space? What are you doing here?
Well, I had to pick up my son. He's out of school for Christmas break, so I end the space. Yeah.
Good. Well,
Thanks
today
for
we didn't
having me.
really. Yeah, and so Fo's biggest two investments are Nvidia and Tesla, which is in line with a lot of the people who follow Tesla Live. And so I highly recommend following him and join his spaces as well. And yeah, man, hell of a bounce today. Can you give us maybe like a couple minute summary of what happened trading action today?
Sorry, I'm in the middle of lunch right now. If you can give me a few minutes, I can come back.
That's all right. We're gonna close the space in a few minutes anyway. But yeah, so I guess maybe my summary of trading action, huge sell-off on Wednesday night and Wednesday afternoon. That kind of bounced around Thursday. This morning there was yesterday. Tom Lee went on TV and said, "Buy the dip, back up to truck." But as someone pointed out on Twitter, that I don't think that tweet got much traction. Tom Lee didn't call the top and say, "Take some profits here." So if you don't take profits, if he doesn't tell you to take profits, then how is he telling you to back up the truck? If the truck is full, dude. So today, in the morning pre-market action, it looked like things were kind of falling off a cliff. But in the morning, in the first half hour, 1 hour, there was a bit of a back and forth, and then eventually bulls showed up and we got this bounce. And I don't think Fo's space looks at Fibonacci retractions too much, but we kind of hit that 50% retracement line. And since then, in the afternoon, the markets have pulled back just a little bit. So I think this is a bull bear fight that's probably going to continue next week. Tonight, we're going to get the results of any sort of potential deal and Congress, or whether a shutdown was averted or not. I think right now the rhetoric is getting stronger that the world's richest man is holding up the bipartisan bill. So I suspect that the Elon and Vivek team will kind of pull back a little bit, but that's also not very characteristic of Elon. So anything can really happen over the weekend. And I suspect that some people are maybe being cautious going into the weekend in terms of carrying positions over the weekend. So it's going to be a volatile Monday. And tonight we also have the expiration triple witching of trillions of dollars of options. So that's always fun. So there might be some volatility in the next hour or so closing the Friday. I'm closely tracking TeslaFSDTracker.com in summary of what we discussed today in Tesla Live. There are for V13, that is purely for AI for vehicles. There are 64 entries, 772 miles enters. This is not enough to be statistically significant in any shape or form. So I'm continuing to monitor. I'm not really reporting it, but Tesla FSD Tracker, I believe, is by far the best way to track FSD progress. There's just a diverse number of entries from diverse number of drivers, from diverse geographies. Just always keep an eye on the number of entries per state, so that not one or two drivers are manipulating the data in any shape or form. Elias is also kind of on top of it in terms of ensuring the data is high quality, and always an eye out for any sort of manipulation of data, whether from the bull side or the bear side. We also discussed Google's DeepMind's partnership with Apptronic on humanoid. This is definitely something to watch, along with Figure AI's partnership with NVIDIA, Microsoft, and OpenAI. We also discussed today price to free cash flow multiple for Tesla. I see in the replies often that people say, oh, this is what people used to say in 2016, 2017, but this is not correct. There was no free cash flow. You could not talk about price to free cash flow for Tesla in those years. Tesla was still raising capital. This is only a recent phenomenon. You can now look at Tesla's price to free cash flow multiples. And today it is 10 times higher than the rest of the Max 7 companies. And that is listed in a tweet at the top of our screens. This is a major reason why I am short Tesla. And these multiples may not matter too much when interest rates are zero, but when interest rates are 4, 5, 6, 7%, when you're facing the potential of a recession, then they immediately start mattering. Wave?
Just want to make a comment on Figure AI. Don't forget about BMW's partnership. To me, that is the second most important one that they have in terms of manufacturing scale and so forth.
Yeah. Like I said earlier, I don't think manufacturing easier. 10 times easier, if not 100 easier than manufacturing automotive, just going by the number of parts and the supply chain complexity. And Tesla manufacturing is said to be superior because of its software expertise, but obviously Google has just as much software expertise. Microsoft, Nvidia, just as much software expertise. So I don't think manufacturing is going to be a bottleneck for the or a critical deciding factor for who wins what market share in the humanoid space. We talked about automotive industries. There's a supply rising. There's lots of excess capacity across the world in every major market in automotive for nearly all automakers, which I think will keep a lid on Tesla's pricing power and pricing margins, which is another major reason why I'm short the stock. We talked about Waymo's recent safety data. This is at the top of our screens as well. And we talked about the housing market, recent comments by Lennar and Toll Brothers. All right, that's it. With that, let's put a pin in this and get back to it next week. Thank you very much, everybody. I appreciate all of you, and I'll chat with you all next time. Take care.